Good afternoon, everybody. Thank you for joining our second quarter earnings press conference here in Bengaluru. My executive team and I are, as always, glad to have you here. I'd also like to welcome Aparna, our new CFO. Aparna, great to have you here with us for your first earnings press conference. So, I'll begin today's conference with an overview of this quarter's results, details of our sectoral performance, the demand environment for sure, and the directions for the coming quarter. Q2 was yet another quarter of strong deal bookings. In total contract value terms, we closed large deals to the tune of $1.3 billion. This is the highest in the last 9 quarters. And this represents a 79% year-on-year growth and a 6% growth on a quarter-on-quarter basis. We booked as many as 14 deals in the greater than $30 million TCV range, versus 10 in the previous quarter. Total bookings from a TCV standpoint stand at $3.8 billion, which is a growth of 6% year-on-year. We added 1 new account in the greater than $100 million client category in Q2. We now have 22 accounts in that bucket. If you remember, we had 11 $100 million accounts in FY21. So we've doubled the number of accounts in the $100 million category. We have also won 2 close to $500 million deals in 2 of our large accounts. As has been the case for several quarters now, cash flow also has remained strong, but 145% of net income in Q2. EBIT, or earnings before tax and interest, of our IT services segment has increased 6% year-on-year. So it gives us great confidence that we are winning in the market against the backdrop of economic weakness. The business environment, as you all know, has been uncertain. Inflation has stayed high, as have interest rates. Clients are continuing to take a much more rigorous look at their investments. That is clear. They are hyper-focused on efficiency, on optimization of existing investments, and faster return on new ones. So, lower discretionary spending is a reality today. Conversion of order book has become slower. Transformation programs that are nearing their project terms are being replaced by new ones, but at a slower pace. All of this has impacted our top-line growth as well. In Q2, revenue declined 2% quarter-on-quarter in constant currency terms. But even though there's some softness in top-line growth, we are continuing to hold margins steady. Operating margin for the first half of fiscal year 24 was 16.1%. This is 110 basis points higher than our operating margin in the first half of fiscal year 23. Now let's look at our strategic market unit, our 4 strategic market unit. In our Americas 1 market unit, revenues grew 1% quarter-on-quarter in constant currency terms in Q2. This revenue growth was led by strong performance in our healthcare business, as well as in the technology, the products and platforms business. Order bookings, in terms of total contract value terms, grew 36% year-on-year. Our Americas 2 market has higher exposure to consulting clients, as you know, and to the BFSI sector.